So I think there are two things that are important to keep in mind. One is the budget that got presented, a couple of months ago, did increase the cost of the way STT would get charged on futures and options, as a result of which arbitrage funds, which tend to use a lot of FNO derivative transactions, automatically saw a possible increase in expenses because of the frequent trading that they end up doing in that segment. The expectation is that that would probably end up impacting the cost by somewhere between 0.2 to 0.35% per annum. So clearly, that's one sort of impact that is coming through. I think there's a very important other thing that happened, which started a little earlier, that arbitrage returns tend to be very linked to interest rates in the economy. And therefore, if you go back in history and look at the returns that you made on arbitrage funds 2 years ago versus the returns that you made in the last 1 year or so, you'll find that there has been about a 1% shift in arbitrage returns downwards. And while a lot of people may end up attributing it only to this cost change, the bigger reason is the fact that interest rates have come down. And because interest rates have come down, and arbitrage funds tend to park a part of the money in debt kind of instruments, depending on what are the alternatives available, there's been a natural progression downwards in terms of expenses. So these two have combined together to actually reduce arbitrage arbitrage returns. So the costs are a smaller segment as compared to the overall return impact.
Disclaimers: investment in securities market are subject to market risks. Read all the related documents carefully before investing.